Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Wednesday, May 24th, 2023. Before I click through the charts, I want to encourage you to please click like each and every time you watch the daily Apple report. It helps us out a great deal in being found on YouTube. Also, become a subscriber to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded. That includes the daily Apple and daily Tesla report. And so I want to show you that, obviously we're slipping back to long-term support that begins at 170.85 and on the daily chart comes in at 170.57. This is a zone that can absorb selling for the week, through next month, and even through the rest of the year. Still anticipating this 218.86 long-term channel top as an ultra long-term objective. I'm talking like over the next year. And that is the gravity of this buy signal that we had almost a month ago above the 170.85. Now, there's been hesitation. Certainly, and in fact, I'm going to take you to a couple of charts here. The SPY, in other words, the S&P 500 ETF, has been testing. Our subscribers to the daily SPY report that you find on wickedstocks.com have seen and been trading this 420.43 long-term resistance area on the SPY. This has been an area, this channel top goes back to, this is a weekly chart, goes back to the January 22 all-time high. This is an 18-month channel top that I've been mentioning can contain buying possibly through the rest of the year. In other words, we're not out of the woods yet, in my opinion, on the S&P 500 for the SPY itself. The S&P 500 and the ES futures, all three, and the SPY have been testing this long-term channel top. I'm going to shift to the triple Q, the same story. A weekly channel top in the triple Q comes in at 340.08. We've been pushing into this 1% zone now for the last couple of weeks, below which the NASDAQ 100, the NQ futures, the triple Q, the ETF, all susceptible to falling back into the triple Q, into the 290s over the next several months. So you've got a broader market testing of long-term resistance, a broader market holding within a long-term bear market as defined from the all-time high. In the triple Q, it's November 21 all-time high. In the SPY, it's January of 22. We are still in a mode that is highly susceptible to significant bearish rotation as we move into the third quarter. And so that is true of the broader market. I've been anticipating the possibility, to be quite frank, of the triple Q, for instance, which Apple comprises about 10% of this index, of closing above this 340.08 channel top at the end of this week. And if the triple Q does close above 340.08 by a 1% margin, I think that will be the signal for Apple, in my opinion, for mustering, for actually getting up and underway on this long-term buy signal. Until then, this hesitation is no surprise. And the question, of course, is, will we close back below 170.85 or on the daily chart, 170.57? And if we do, if we close on the weekly chart at the end of the week below 170.85 by the 1% margin, lower right of 169.14, then we have a failed long-term buy signal, which is an actionable sell signal. I'm going to jump to the daily chart just to cover that. And I do have 169.06. So this is a beautiful channel bottom that I like right now because it correlates well with that 1% violation zone below 170.85. So I think you can merely follow 169.06 as your downward pivot point into June. In other words, if we close today below 169.06, then I see this market falling apart to the 159.48 formation within, I'm going to say 1 to 3 weeks, probably more like 2 weeks. And over the next couple of months, 2 to 3 months, this 150.40 long-term channel bottom would be expected. If we settle the week back below the 170.85 formation, by the full 1% margin, which I think would also involve and entail a settlement at the same time below the 169.06 channel bottom. So this is really kind of also your base of support. It really is a range that begins at 170.85 and ends at 169.06. I know day traders don't like to hear all that because that's a wide zone. But for those of you who trade the swing trade, the 2 to 3 week upside trade, keep in mind that holding above 170 170.85, still maintains a 3 to 5 week objective at 182.94. So for swing traders, this is good information for you to have. 169.06 is really sort of the last holdout that, if violated, does pivot the market aggressively south as we move into June, July, expecting the low 150s within a couple of months of doing so. But until then, still bottom picking territory. And there's nothing to say that by the end of the week, this market, and I'm talking triple Q now, doesn't recover and actually settle the week above 340.08, which would present a long-term buy signal for the triple Q. I've been mentioning to my wickedstocks.com subscribers who get the daily triple Q and the daily SPY report that if we close above 420.43 in the SPY and above 340.08 in the Q at the end of the week by a 1% margin, that is a discontinuation of this long-term bear market. And with that, I would expect a resumption of a long-term bull market. So there you have it. Big critical test right now for both of these. And I guess it's my way of saying you should check out wickedstocks.com if you want an early lead on broader market moves and real precise support and resistance levels. Let's get back to the day itself. Sorry, didn't mean to do that. Let's get back to the day itself. I'm going to comb through some of these charts. So for the day itself, this former channel top that we broke on Tuesday and closed below, I have as an intraday resistance only. 172.82 can contain intraday strength, and below which the 170.85 level is expected, and that is part of a range down to 170.57 that can absorb selling for the week through June and even longer term. And once again, a break. I'm going to say that closing. Now, there is a scenario things get ugly today. We do have the debt talks and so forth and so on. And so is 169.06 in reach today? I will say that, yeah, you should respect that possibility if we break 170.57, 169.06 in reach. This is the last holdout, as I say, and this is still bottom picking territory. We can spring back, and as long as we settle Friday, as I say, above 170.85, it still is all systems go to the upside as we expect bullish continuation into later year. But once again, closing below 169.06, if you bought those 182, 183 out of the money calls that don't expire for at least a month or two, or even higher as we move into later year, you might consider, in fact, I would suggest covering them, liquidating them, reversing. Buying 160 out of the money puts that don't expire for at least 3 weeks. Buying 151, 150 out of the money puts that don't expire for at least 3 months. That would be the play in terms of the big picture options. Upside today, I can just mention it right here, that if we push above 172.82, 174.43 in reach. 174.43, nothing more than a 5/8 upside Fibonacci over the last 3-day extremes, where we can actually place a daily high. If we settle today above 174.43, a good low for the week, 178.05 then in reach, and that is this channel top here you see that actually held nicely a few weeks ago, and we came very close to testing it last Friday. I bumped it up to a 2-star resistance. In other words, if we were to test it over the next 3 to 5 days, and once again, it becomes kind of a 2 to 3 day target if we settle today above 174.43, 178.05, able to contain 2 to 3 day highs, and if settled above, would then once and for all signal within 3 to 5 more days a test of that 182.94 all-time high from January of 22. I think that pretty much rounds it out. We're pushing 9 minutes. I'm going to leave it at that. Please click like, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Thursday's Apple Report. You have a great day.